joy while you play hide and seek. The joyfulness of an unabated rally, Matt. It's Tuesday, Taco Tuesday, and if you're going to taco, you better be using some shrimp mojo on those shrimp tacos. That's all I got to say. There'll be a strong, stern correction if you do not. Matt currently looking down trading for sure. Flies in his wheelhouse.
In his windscreen, yeah.
In his windscreen. Matt, I want to share right away the Twittersphere. I got to tell you that this is why I love the Twittersphere. All right, where am I sharing? Here it is. This is a little preschool action or kindergarten in China. Let me tell you something about China. I can't stop watching this. You cannot tell me you could get a kindergarten in the United States where the kids could do this. You couldn't find 3 of them that could dribble one-handed out of 25. These kids are like
could if they went to Montessori school.
Little perfectly trained munchkins.
Yeah.
I bet they can already do math.
You know, my mother-in-law taught at a expat Montessori school, so they weren't Chinese in Beijing. She did that for 3 years, and but they weren't Chinese nationals. I bet you she could have taught them to do this. Americans,
I don't know. It's just, I mean, there's, I mean, I've been involved in a lot of threads on how soft we've become in the West, and I just would love to see a kindergarten in the U.S. And first of all, how many of them are overweight already in kindergarten?
Yeah, and
how many? How many know who they are? None of them. It's a crazy mixed up world. That's got a fly code. The other thing I wanted to point out was something that I did not understand until just now, that I could have gotten way better grades had I just
showed up.
Maybe not better grades, but for sure I never would have had to take heat at home when I had to show the report card. You just change it. It's fantastic. A beautiful thing too, Matt, about the working world, the trading world, is that that is not how.
That's how it worked. You could change. Remember back, like the paper report cards you got in Catholic school.
Oh yeah.
Wasn't it like outstanding?
Does not relate well with other students.
No, it was like outstanding, good, satisfactory. They weren't
great. Speaking of satisfactory, in nobody's camp is the Seattle Kraken's new mascot. The real fly is telling us it appears to be a transgender vampire. Got the red tongue.
But what is it? It's like a hot poker too for your wood fire, because you will have no heat and like it.
I have no idea what this mascot is supposed to be. Representing something, I don't know. All right, enough of the shenanigans. Let's talk prices. And you know what? We're going to jump. First of all, I wanted to share this that you shared in the network. So we can talk prices. And that was this little list. And this is from Inflation Tracker. Banks are over levered $2 quadrillion in derivatives. They're all on the brink of self-destruction. Let me just bring up a little closer graphic of that. Not very clear, but JP Morgan Chase, and these are US banks, by the way, leading the pack. Goldman Sachs second. 61, and too many numbers for me to understand what that is. 50 for Goldman Sachs.
Quadrillion.
Is it trillion?
Quadrillion.
Quadrillion. That doesn't report. I tried to take a quadrillion out of my ATM machine, and it would not. I mean, it's staggering. Now, there is this thread, and I saw the Credit Suisse threads that were like they're going to be fine because their capitalization is 7.
That's quad trillion. So it's like 4 trillion when you combine like the top 10 there. You add all those up, that's over $4 trillion of Tesla
exposure,
of Tesla calls and puts, of Moderna, whatever, you pick the name, all the different leveraged vehicles on equities, bonds. I'm sure that includes futures. I'm sure it includes
it's the whole
options
their whole book.
Yeah.
All right, so you know what? It's too hard for us to understand. The only thing that can systematically understand is the profile and the longer term profile, to be exact. So let's look at Goldman and JP. I know we've looked at them before, but with the Credit Suisse, I mean, everybody's got to have some contagion if something were to implode.
Yeah. Again, the timing on this is now's not the time. Again,
right. It's difficult. I agree.
Well,
but the market structure,
I think we're in the middle of a counter trend rally that has, I said it on Friday. I'll say it again, and we're already up 7%. So if you missed it, wait a little bit for the pullback. I don't know how much of a pullback we get, but as long as we stay above, let me just say, as long as we stay above 36.50
on the
SPOs, I think you're fine. Right, as long as we close above 36.50, and we're at, where are we right now, 37.79. So
yeah,
we're a long way above that. And again, the Fed is back, the QE is back. I mean, I watched today, and again last night we went up 100 points again and before we even opened. I mean, it's ludicrous. And then we went to 3,800, which was the number I was looking for. And we traded there for 2 hours, and now we've fallen down 25 points or so. Big deal. But Goldman Sachs is on a bounce. Again, all assets are one. When the US dollar goes down, and we're going to talk about this, when the US dollar goes down, gold, oil, silver, every stock you can think of, commodities, oil's back up to 87 it hit today. The only thing that's not going up in the commodity world right now is natural gas, and we'll touch on that later. But Goldman Sachs, didn't make a new low here, but traded all the way down to about 290. So, again, now bouncing. Bear markets are very difficult because they don't just whoosh when you want them to whoosh. They usually whoosh after they go up. And that's what people don't get. That's why this is a fader's market, and you have to learn how to fade at the right spots. Now, for me, 290 from 357. If I think the NASDAQ or the S&P is going to go to 39.50 to possibly 41.50, which is the range I do think it's going to trade up to here, and it'll be swiftly. I mean, we already got 7% since the Sunday low, 7%, 36 hours. So they crushed everybody who thought the world was going to end on Monday. And that's the way it works. Like when everybody is leaning the wrong way, they can't all be right. It just doesn't work out. So the end of the world is not coming, at least for another few months. I think I think with the election and what's happening in Europe and Russia, I think November is going to be an interesting period. October is earnings. So why wouldn't we continue to run into earnings and then crash after earnings, right?
Well, so, you got to see, again, I think people will probably report okay, but just like the Nike story,
yeah,
demand destruction has had to have happened.
People are pulling back. I don't care what you say; they're pulling back. So whether or not the government tells us the truth, it doesn't matter. You talk to people in business; things have slowed down. I mean, you see it in Tesla. You see it in any name you want to look at. JP Morgan, again, same thing here. Made a new low recently, as opposed to not making a new low. And Goldman Sachs, that was down here about 104s. And is trading 111. So again, up 7% in the last 2 days. Very, but balance is right here at 115. And I think, any rally up to 124 would be saleable again. That would be a 20% rally. So kind of like, when you see these 20% moves, and especially in big name stocks, that's a good time probably to put it back on 15 to 20%. Again, prices are lower here at 104 than it was just at the end of 21 when it was 172. So again, 70% off pretty much this year. And, they're giving them a little reprieve, to try to get some bonuses up before they fire everybody at the end of the year too.
Well, they already gave pink slips to a bunch.
I know, but I'm just saying there'll be more
after the next earnings. Matt, you shared this in the network, and this is from I'm not sure where the graphic came from. The source. What is the source? Spark Commodities. Thank you, Spark. And this is the LNG tanker rates. Now, we've seen that the shipping container rates in general have plummeted. I mean, what was it 28,000 for a container to ship? Now you can ship for $3 on its way down to, free.
Right.
Especially going back to China. free. But this one is directly in response to the fact that natural gas is not going to have an easy time going through pipelines anytime soon.
Right.
And so the cost of
and then and again the shrapnel coming out of Russia saying we might be able to fix, Nord Stream, we might not, like that's flipping back and forth now, right? Too. So and it's interesting, almost like, because I really think the Biden administration was really trying to play this as a climate problem with all the gas coming up. And I think that's already blown over because people called them out on that. They're like, this just feels false flaggish, right? I mean, people are so aware now of this stuff.
Well, I mean, as a commodity trader on the floor, I took everything as a lie first.
Yep.
And was proven right so many times that's become my. But yeah, and the only thing that matters is the price.
Here's a perfect example. When we were watching the game over at my place last night, my neighbor, who is not involved in markets, doesn't know anything about them, but occasionally will send me a news blip, and it was a news blip that North Korea had fired a missile over at Japan, and they were telling their people to cover. And I said, well, I said to you, it's probably a buying opportunity.
Yeah, there wasn't even a.
And when I looked, what's interesting is the SPYs were 37.12, and I actually bought some at 37.12 because I'm like, we're going to go to at least 37.50 tonight. And so I bought those when we were sitting there, and I sold those at 37.50 by the time we opened, and then they went to 3,800. So the point is, like, when that stuff happens, like the price tells you everything, right? I looked really quick and I'm like, okay, this is another reason to buy.
Yeah, exactly.
Because the retail who doesn't know anything is like all scared. And I'm like, oh, they're God. Right.
Let's look at natural gas because shipping it's going to be more expensive.
Yeah,
for sure.
So natural gas again, hit a new low today, 631. It actually ticked a little lower off the open. And I just wanted to show the kind of the big scale picture. But remember, this was just at the end of August. This was $10. So this has come off 40% down to 630. And then today, again, you're kind of seeing a hammer. I think we're over yesterday's high. So that's one step. Again, you get it over 715 again, this thing's off to the moon, I think. So that's kind of how I see it, Bob.
Right on. All right, let's continue down the energy path and look at crude because it's up nearly 3.5%, $3.
Yeah, and again, it traded up to 87. As you and I talked about again over the weekend, locally gas is back over 5.25. Not quite as high as the 8 that my son paid in San Diego over the weekend, but they're back over 8 in San Diego on the, in those areas down there. And it's not going away. Again, once Biden's he's trying really hard to keep oil down into the election. I think he's going to have a hard time. I think the bottom's already in. We talked about 75. It went to 70. What did it get to? 76. So it never really even got to 75. I really wanted to buy a bunch down at 70, but it never got to an area there. But if we still go back in the next month, I would still pick some up. And again, I own it already. I did buy some flat out, but I didn't get the options I was looking for. But that's the way it goes. Sometimes you're waiting for prices and it doesn't always work out for you. So, but I think overall, I think we may have again put in some lows for at least for the time being. And I'm not saying we're going back to 130 tomorrow, but I think by next year we'll be back 150 to 250 on crude. Like it'll be blowing people's minds. And again, I wouldn't be surprised next year if we have stagflation galore, interest rates going higher, and nowhere else for money to go. So the there's going to be a run on the dollar higher. And, I still see that kind of playing out.
Well, we've been calling for 160 for 120, then 160. I'm not sure I understand all the dynamics ever.
So, on a 5-minute chart, let me just show that here again on on crude here, because it did have a nice little snapper again today. And again, this is 2 days in a row where it's taken out the previous day's highs. So that yesterday it did, and today it did. That's very bullish. And really, when it bottomed at 76, when was this last Wednesday? The 28th. Yeah, that was Wednesday, Thursday, Friday. Yep. So again, that bottom seems pretty solid right now. We're $10 above it, and it's again, bond prices aren't doing much today. Bonds are quiet. It's a weird day. I mean, it just felt like it was just another day to squeeze. Retail today was day two, and that overnight squeeze was just vicious. Like if you were short the close yesterday and just waiting, for a pullback, you had to wait at least 2 days.
You might be waiting. You might be waiting a while. All right, man.
But also you can see, so the bonds again, 123.30, and then again they're making another new high here today on the ZB, but just barely. And again, getting into the meat of the substance here, it has broken out of a trend line on a trend line guy. I've just pointed out what other people are looking at, because that does have an effect in the markets. But I think overall, let's face it, interest rates are going higher, so bonds aren't. Any bounces I think are short-lived, and but I would love to sell 143 to 145 up there in the UB. So please get it up there. We have not taken out that 140 level, although we approached it again today right at 140, but we didn't take it out. So that's 2 times at 140. Maybe the third time mouse gets the cheese. We'll see.
Always. Matt, speaking of cheese, a lot of chatter for the gold and silver bugs. The cheerleading really is ferocious when they get a move higher. They go quiet, they go dark really quickly on down action.
Yeah. They never tell you to buy when it's down, which I don't get. Like that would be the easiest game.
Bring it out. Let's look at both silver and gold.
All right. Before we do that, I had a chart that I wanted to look at, because everybody's talking about. Elon said, "Okay, I'll give you 52 a share." So that spiked on that news here today, and we got up to 50, and have since pulled back to 48. Do you have any thoughts on this? Anything that you're thinking about? Twitter? Do you care?
The only thing I got to tell you, the only thing thought wise that I had on it was how much I actually appreciated the give and take in the text chain that was made public between Jack and Elon on the whole format of it, and that Jack basically saying, it didn't turn out the way it was meant to be, and that he struggled to find a way to some rationality in the I mean, that's what I took from it anyway. And that maybe it shouldn't be a for-profit company. It should just be an open source, self-regulating network. I just thought that was fascinating.
Does Jack have to give back all his money then?
Well, fuck no, he's not going to give back his money. Come on. But he could say, I made all this money, and by the way, this is not functioning the way it should function, especially around the suppression algos, yada yada yada. So anyways, I don't know, maybe Elon does some good.
Yeah, I think Twitter thinks they've suppressed and canceled the MAGA man, but the reality is that that person's only gotten stronger. So good luck in your fake world, because it doesn't really matter in the real world. They've just gotten stronger. That which you resist persists even stronger. So go for it, Twitter. You're making a bigger issue for yourselves. And the pain later will be even deeper. What did you want me to look at real quick?
Well, let me just bring this up for a second.
Oh, you wanted me to look at gold.
I want you to look at gold and silver, but before we go there, let's go back to freespoke.com, Matt. Freespoke again. This is a technology that's trying to be, anyway, what they're saying is they're trying to be more clearly and more transparent. And the one thing that they do on this site that I kind of like is they give you the headline, right? NFL defensive star Bobby Wagner lays out animal rights protester. By the way, if you saw it in real, that was fantastic hit. But then they give you from the left, CNN, from the right, the Washington Examiner, Houston Chronicles, supposedly the article leaning neither way in the middle. And I kind of like this. I kind of, had Twitter been more like this is one side, this is the other. Here's another one. Iran schoolgirls removing hijabs in protest from the left, a couple from the left, one from the right. OPEC hike threatens status quo ahead of midterm elections. I I don't know. I just thought, I think this is interesting and a better way to present information for people where they understand that it's all propaganda. And so let me read your propaganda story and let me read your propaganda story and see if there's something that, again, man, bring up the chart of either one of those, because the chart has no propaganda in it. It's just got people willing to invest their money and take losses. And that's a much more, less nuanced, Matt, less nuanced when somebody's going to put money where their mouth is. Oh, look at the fly. The real fly, Ted Bundy.
Is driving me crazy here today. Yeah, gold bottomed actually before the market did, and that looks like Wednesday, same time oil did. So somebody got the early, line that this was going to happen, on the commodity side, and which is the way it works, right? Those guys are a little smarter. They have to be. They have to be ahead of the curve. So that shouldn't really surprise you or me here, but we bottomed here at 1621. We're already up $100. So if you missed it, you've already missed, $100, which is 6-7%. Like the rest of every asset goes up when the dollar goes down, and we talked about this earlier. So if I look at a little longer term chart, give me an hourly now. Again, we are up here. Looks like 1746 was the last high in our targets here. And then above, I could see us again trading back to 1840 is the point of control. It's just a really sloppy chart. It's still, there's nothing bullish about this except for it's a counter trend. We made a lower low, and we'll probably make a lower high again. Here is that has.
Well, I mean, I do like that fact that the point of control is lower than the high. It is a perfect double Galaga. But you got to respect the fact that it spent a bunch of time out of that value range.
It could go up to 1900.
Yeah,
absolutely. Yeah,
exactly.
And then I want to bring up a chart just to show you kind of like, instead of looking, since a lot of people don't trade futures, which I don't know why, but they want to talk about SPY. They want to pay more taxes and trade the SPY, which is their, again, it's a free market. You can trade the SPY, but it only trades 6 hours, and it doesn't give you the liquidity and the tax advantages that futures do. So if you trade SPY and QQQ, I highly recommend that you learn how to trade futures. It's just a leveraged product. But
yes. And the casino's open a lot longer.
Casino's open a lot longer. But if you just look at this, Bob, I'm going to take this just from the recent high. Okay. So let's just go kind of from the recent, lows to the highs. And then, kind of where I see this going back to is somewhere in here, like this chunk, like 395. 395 is right in here. I could see us trading into here pretty easily, which again, from this 430, whoops, I didn't mean to grab that line. I'm trying to grab this price. So from this 431 area down to the recent low, again, these 2-month cycles are in play. This is a huge move. This is almost 20%. This is a bear market in itself, from 430 to 351, almost $80. So, and now we had a hard bottom here. Again, you had a higher low on the RSI. If you're into this type of thing, you can always go back and look at it, right? These were opportunities, but it's gone already. You've missed the easy money. Like the 7% is the easiest money you're going to get in 36 hours. It went up. Now the rest of the way to this 395, and I think we will go there. It'll be $20 higher. We're already 20, so we're already halfway. We're halfway to what I think we're going to get. So again, buy back to 365 and be long up to 395 if you have a longer time frame. So there's a lot of ways you can position this with options or straight out buying futures, or you can buy the SPY if you want to pay more taxes. But there's a lot of ways to do this.
That's right in our prospectus. We don't like paying
if you want
taxes.
to, again, I think if you get a pullback somewhere in this hole to like 370 would be great. But I'm not saying we're going to pull back that much either. So it's one of those deals where I think you probably need to buy, get some exposure on, like we just had a little pullback. We just had a little pullback from 3,800 down to, went to 380. So what was the high here today? 380, 377, and we just pulled back to 374. I mean, that's okay. Like this hourly chart is matter of fact, that's what it's doing. It's kind of testing the moving average on an hourly chart. You could argue. So that this area down in here, 370, 3, that's probably buy some calls in the money calls, buy the 365s in the money when it's at 373, that type of thing. That way you don't at least have to put on as much exposure. So when that pulls back, you have to be prepared and say, I'm going to commit to these levels. Now there's a gap here too that needs to be filled. It will be filled. I'm not saying it's going to be filled, but it will. It might be on the way back down though. I don't know. But if it were to fill early, 368 would be a great area to buy, because then it's got to hold basically 365, which is this level right in here. So
bingo.
That's kind of how I see that. And then on the silver side, let's just look at silver futures. We haven't looked at those in a while. And I think that, just like gold, is probably on its way to 25 to 27, somewhere in there. And again, the low here was higher than it was in September. So 1790, we're already up. I mean, this is a huge move. Huge move. This is already up 15%. So silver is definitely outperforming gold, and because of the percentage move here. So if you believe in the longevity of this story or this trade, I think it's got some legs left. And again, if you look at the longer term chart here, let's see if that 25, 26 area kind of comes into play. Yeah. And again, right up in here, I can see this kind of 25 to 27 definitely could come into play here pretty easily. And it wouldn't be bullish still. It would not be bullish on a longer term chart. So again, working off the oversold, right? Think about this. You're working off the oversold. It's all it is, oversold. And now coming back into an area where plenty of people have an argument, as you like to say. The argument then becomes, are there real buyers past 25, 6, 7? If there are, then it's going to be really bullish. If they're not, we're going to collapse back down. So my guess is
it's right. Crystal clear. It can't be clearer.
Again, you can play the long side until it gets up to that area, but it gets more difficult as it gets closer, because the battle and the argument gets louder. So just be aware of that the easy money, super easy halfway of this move has already been made. I mean, we've gone from 17 to 21. Again, just like we talked about in the SPY, that's $4. That is a $4 move. We've already seen $4 up and another $4. Great. So where do you get on though after it's already gone up for it, or do you wait for it to pull back 1, 2, 3? Right? I don't know where it's going to pull back. There's all kinds of news that can make this market go up and down right now, but have something in your mind. Where do you want to participate? How do you want to participate? And where will you participate?
Right on. And obviously then, where's my participation suspect? Because right. I need to be beholden to that risk level that I've already decided before I put that trade on.
Yeah, right. I mean, it's not that difficult, but I think people don't plan. They really don't plan their trades well. I think they just, they respond to news. They respond to a missile flying over Japan, it's not the way to trade. You got to trade the price, right? This is why fundamentals don't work. Fundamentals work one time. Like there's one time when the price is perfect.
Fundamentals. All right, now what else we got? It was a good Monday night game last night.
Yeah, how about the I got the under, right? But the Rams just looked like dirt. I mean, I don't think Matthew Stafford's healthy. I really don't.
He might not be. The other interesting thing that we spent a lot of time conversing around last night was both of the coaches had been on NFL sidelines since they were in diapers. Basically. Yeah. And you cannot, it's like, wow, this guy's so young. How did he get that good? It's not a mystery when you understand that he's been there, both of them, the Shanahan and the young gentleman from the Rams. McVay. Nice Irishman.
Mm-hmm. They're all Irish, right?
Everybody's an Irishman. Right on. The Irish and how they saved the world.
Something else I want to talk about, like if you have a bullish bent, right? If you have a bullish bent or a bullish bent on your bearish trades, like you like the SQQQ. So I want to bring that up because it's down 9% today, right?
Yeah, it's leveraged, it's triple leverage.
No, but this is a good time to talk about this, okay? Because if you've been long and since mid-August when this thing bottomed at 33, the last bottom, and then it almost doubled, right? So that's fantastic. So think about this, Bob. Like if you were buying some protection here and 20% of your, let's just say 20% of your, you got 100 grand long in the market. So you bought 20,000 in this as protection, just a 20% hedge. That 20,000 went to 40,000, right? Book that in, take that profit and buy it back when it gets back down here to 42 to 46 on the same side, right? Now we're talking about, you can sell the SPY or you can buy the SQQQ, which is the quadruple leveraged Qs,
Right.
protection to the downside. So when the market goes down, these go up. They're getting crushed. I mean, this is off almost 15, 18% really in the last 4 days. So, but I think there's room still to move to the downside. And you would love that if you want some more hedge, take some more hedge at 42 to 45. That looks good to me.
Bingo.
Right? And that goes in the same sense. As this market rallies, gives you an opportunity to get back in and put your hedge back on. So you got that original hedge, maybe you took half off. So you're playing with house money, right? You watched it double, you took off your original investment. Now you can watch it come back down and buy another $20,000 of it. We're, at that level here at 42 or 40. And that gives you some more protection. And as this market recovers and some of the shit stocks that you own maybe have recovered, take some of those off too. That's a good time to lighten up. Take some of those tax losses before it goes lower.
Well, we're going to
sell
get
into strength. Always sell into strength.
I mean, kind of the reverse of last year as we move here to the end of the year, as booking profits in the new year was. All right, Matt, I don't have anything else here pressing in front of me. Anything else? Any last thoughts?
No, I'm there with you. Pretty sleepy. We're just kind of hanging at the, we had the 2 quick trades and we're just kind of hanging here at the, at the precipice. Bonds are lower, bonds are low. We're about to close here in 15, 20 minutes and the bonds are sitting basically near the low of the day. I'm looking at the UB 138.16. The low is 38.02 or so. So that rallied harshly and then fell right back. And again, I think a lot of this, I think the move, we might see a 1 to 2% pullback tomorrow, maybe in the equities, just because we had a 7% move. But we'll see. Maybe we won't. Maybe we'll just gap up again, and the machines will get turned on overnight, and they'll run them another 3%. I mean, there's no reason this market's up 3% except everybody's short.
Yes, exactly. The dynamic.
So until we get out all those retail that were selling Friday, and we're all screaming that Credit Suisse and Deutsche Bank are going to collapse on Monday, and there's an emergency the FOMC meeting, which was
all bullshit, right?
Exactly. All bogus, but it worked. They weren't talking about that on Thursday. They were only talking about that on Saturday. So you knew what was going to happen.
All right. That's what we got. Please visit us at marketvitals.io. Please share, retweet, restream, plagiarize far and wide. Please go to marketvitals.io again and join our community. Other than that, visit amazon.com and get yourself some shrimp mojo. And why not get a hat? Redbubble, Manja TV. Thank you, Matt. Thank you, Lee.
Thank you, Bob.